All right, class, settle in. Today we're going to tackle something that might seem a little intimidating at first, but I promise, by the end of this, it'll make perfect sense. We're talking about the Canadian income tax return. Now, forget just filling in boxes. We're going on a journey. We're going to follow your income step by step, right from the moment you earn it to the final number. So the guide we're going to be walking through today is the Federal Income Tax and Benefit Guide. This is our main roadmap. If you've got it open, that's great. You can follow along. If not, don't worry, I'll guide you through everything. Okay, so here's our plan for today. First, we'll look at the big picture, the roadmap of the return. Then, we'll start where it all begins, total income. After that, we'll see how it gets refined down to net income, and then even further to taxable income. Next up is the actual calculation of federal tax. And finally, we'll get to the bottom line, whether you get a refund or owe some money. All right, let's jump right in with our first section, the tax return roadmap. Before we start plugging in any numbers, it's absolutely crucial to understand the logic behind the T1 General form. It's not just a random jumble of lines and boxes. It's actually telling a story. It's the financial story of your entire year. And really, this is the best way to think about it. It's not just a form, it's the story of your income's journey. So that's exactly what we're going to do. We're going to follow $1 from the second you earn it and watch it travel through all these different stages, all the way to the final calculation. And once you see it like that, I promise, the whole system just clicks. So where does this journey begin? It starts right here with total income. This is step 2 in the guide. I want you to picture it like a big reservoir. We're going to pour every single dollar you earned from every possible source right into this one big starting pool. And yeah, when I say everything, I mean everything. We're talking your employment income from your T4 slip, right? That goes on line 10100. Any government pensions like old age security or CPP benefits, they go in. Investment income? Yep, that's in the pool. If you're self-employed, that income gets added too. Even what's called other income, like certain lump sum payments. See, the whole point here is that everything gets its own specific line. It all has to be accounted for right at the very beginning. Okay, so now we get to probably the most important part of this whole journey. We've got this giant pool of total income, right? Well, here's the good news. The government doesn't just slap a tax on that whole amount. No way. Instead, we get to refine it. We get to shrink that pool of money using things called deductions. And this happens in 2 distinct steps. And this brings us to a really, really critical distinction. After that first round of deductions, we go from total income to something called net income. Now, I want you to circle this one in your notes. Net income is, well, it's kind of the magic number. Why? Because this is the number the government looks at to figure out if you're eligible for all sorts of benefits and credits. Things like the candidate child benefit or the GST/HST credit. It's a huge deal. So how exactly do we shrink that big pool of income down to our magic number? Well, we use deductions. Think of them as tools that let you chip away at your income. They're specific amounts you're allowed to subtract. And the most important thing to get here is when this happens. You're reducing your income before a single cent of tax is even calculated. That's key. And look at this. This lays out the path perfectly. You start with your total income, that big reservoir. Then you apply the first set of deductions from step 3, things like pension contributions or childcare. And boom, that gives you your net income on line 23600. But we're not done. We then apply another set of deductions from step 4, and that finally gets us to our ultimate destination for this part of the journey, taxable income on line 2600. This is the number that the tax rates will actually be applied to. Okay, so we've done all the hard work to get our taxable income. Now what? Well, now we're ready for step 5, where we finally calculate the federal tax. And just like before, this is a 2-part process. First, we apply the tax rates, and then we apply something called tax credits. So part A of this step is pretty straightforward. It's mostly just math. We take your taxable income, and we run it through the federal tax brackets. Now remember, Canada has a progressive system. What does that mean? It just means you pay a certain rate on your first chunk of income, a higher rate on the next chunk, and so on. It doesn't mean your entire income is taxed at a high rate. After this step, we have our initial tax amount. So that's it, right? That's what you owe? Nope, not even close, because now we get to pull out another tool from our toolbox, and this one is a game changer. It's time to talk about tax credits. Okay, class, if you only remember one thing from today, make it this slide. The difference between deductions and credits is absolutely fundamental. Let's break it down. Deductions, remember? Shrink your income. They make the pile of money that can be taxed smaller. But credits? Credits are different. They reduce your actual tax bill, dollar for dollar. The coupon analogy is perfect. Imagine your tax bill is $100. A $100 credit is like a coupon that pays that bill for you. It's incredibly powerful. And here in Part B, you can see a whole bunch of these non-refundable credits. Some of them are for things basically everyone pays, like your CPP contributions and your EI premiums. The government gives you a credit for that. But then there are others for more specific life situations, things like medical expenses, tuition fees that a child might transfer to a parent, or hey, even for your digital news subscriptions. It's a real mix. And that brings us to the final step, the moment of truth. Step 6, the final reconciliation. This is where we take all the numbers we've calculated and figure out the final tally. Are you getting money back, or do you have to pay? So, once you've used up all your coupons, your non-refundable credits, you're left with what's called your net federal tax. So in our little example here, let's say that number is $5,250. That is your official federal tax bill for the year. But wait, there's one more piece to this puzzle. Because now the system does a final check. It's like balancing your bank account at the end of the month. It takes your total tax owing, that's your federal tax, plus any provincial or territorial tax, and compares it against all the money you've already sent to the government during the year. You know, all that tax your boss deducted from every single paycheck, or any installment payments you made. All of that gets counted now. And that final comparison can only end in one of two ways. It's simple math. If it turns out you paid more throughout the year than your final bill, congratulations, you get a refund. The government sends you your money back. But if you paid less than what you actually owe, well, then you have a balance owing and you have to pay the difference. That's the whole ballgame right there. Okay, we've gone through the whole journey. But before we finish up, let's talk about some really important practical stuff. Filing your return and the deadlines. This is the part you really don't want to mess up. So here are the dates to burn into your memory. For most of us, the deadline is April 30th. That's the day you have to file your return and pay anything you owe. Simple. Now, if you or your spouse is self-employed, you get a bit of a break on the filing date. You have until June 15th. But, and listen closely, this trips people up all the time, even if you're self-employed, your payment is still due on April 30th. You get more time to file the paperwork, not more time to pay. Remember that. So there you have it. We've traced the path of your income all the way through the tax return. You now understand the mechanics, the how of it all. But that leaves us with a much bigger and honestly a more interesting question, doesn't it? Why? Why is the system built this way? Why these specific deductions? Why these particular credits? What is the government trying to accomplish with all this? And that is a topic for our next class. Thanks, everyone.